Alright, what's going on, people? It is another episode of MotoMoney. As usual, we are going to be talking about different personal finance things to help you manage your money. Yeah, baby. Okay, so now that we've covered a lot of the fundamental stuff, talking the little bitty baby steps of personal finance, the absolute basics, it's time we start getting into some of the fun stuff. And the first fun thing we're going to talk about is credit. I'm sure many of you, if not all of you, have heard the term credit score. People are always talking like, how do I fix my credit? My credit score went down. Whatever. If you haven't heard about it by now, maybe you're still young, maybe you just don't go outside, but most people are very familiar with this. But right now, you're in the right place because we are going to learn about it. What is it? How do I have good credit? How do I have bad credit? Okay, so let's get right into it. So to put it simply, the credit system is a system that banks and other financial institutions and other lenders use to determine how trustworthy you are when they let you borrow their money. Oh my gosh, that was a mouthful to say. So the best example I can kind of think of to try and help illustrate this is, let's say I have a lot of money in my bank account. And one day my cousin Mike calls me up and he says, hey, guess what? I just found this sweet deal on a boat. I want to buy it. Here's the problem. I don't have enough money for it. He's like, is there any chance I can borrow that money from you and pay it back later? Now I'm in this position like, I don't know. This is my hard-earned money. How do I know for sure I'm going to get that money back? So what I do is I call my friend Brian, because I know Brian has let Mike borrow money in the past. So I give Brian a call. I say, Brian, what's up? Hey, listen, my cousin Mike just called me up and asked if he could borrow money for a boat. I know you've let him borrow money in the past. I just wanted to see what that experience was like for you. And Brian says, you know what? It was actually not a bad experience. He paid me back the money he owed me. He's good for it. I say, great. I hang up the phone. I call back Mike. I'm like, Mike, you got it, dude. You can borrow that money. What I just did right there is very similar to what lenders will do before letting you borrow money. Lenders will do what's called a hard pull or a hard inquiry of your credit. Your credit is basically your history of borrowing money from lenders. And based on that history, you're given what's known as a credit score, with a perfect score being a credit score of 850 points. A goal we all strive for. So based on your score, lenders will determine whether you're eligible for certain credit cards, certain loans, certain mortgages, financing a car, you name it. If you're borrowing money, they're going to want to see that score. The better your score is, the more likely you are to get approved and for better interest rates. The better your interest rates, the less extra money you have to pay. Pretty sweet, right? So how do you get a perfect credit score? All right, let's go over the 3 main ways to get a good score. Rule number 1, never, ever, 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 ever miss a payment. If you have a loan, if you have a credit card, if you have a mortgage, please, do not ever be late to pay it. Or at the absolute very least, don't be late enough to pay it that it gets reported to the credit bureau. Late and missed payments have such a huge impact on your score, and they take 7 years to fall off. The one thing I will say is over time they do tend to have less of an impact, but they still leave a heavy, heavy dent. Okay, next thing you should do to get perfect credit. Make sure to keep all of your revolving balances low. Do not keep a balance of over 30% on any of your credit cards. That means that if you have a credit card with a total limit of $1,000, don't let the balance ever be more than $300. That will also have a huge effect on your credit score. Why is that the case? I couldn't tell you. I think that's a pretty stupid rule. If you only want somebody using $300 of a credit card, then only give them $300. But to be honest, even stupider than the rule is keeping a balance on your credit cards in the first place. The interest those tiny little pieces of plastic collect is so humongous. So if you really want to play it safe, just pay your credit cards off in full every single month. Pay the balance off as soon as you use it. This one can also have a super fat effect on your credit score. So just pay them off in full. Alright, next, I'm actually going to give you 2. Have a few different lines of credit. That means have more than one credit card, or maybe a credit card and some student loans. Something. You just want more than one account. I don't know how this helps. Maybe it just shows that you're able to keep track of multiple things. I don't know. I'm not asking any of the questions. I'm just going to show you how to navigate it. Okay, and apart from this one's kind of out of your control, unless you haven't established any credit yet, is by having credit for a long time. For anybody who has any sort of account, this just means if you don't have a credit card yet, go get one. Do not be a dingleberry. And I'm allowed to say this because I've been a dingleberry. I've earned my right. But when you have a credit card, treat it exactly the same as a debit card. Don't spend anything you don't have, and only spend on the stuff you need anyways.